Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgen Lee. I want to share with you some urgent chart analysis. Here we have the weekly chart. What are these red dots? They hold quite a bit of significance. It correlates to the times when the MACD indicator crossed to the bearish. Back in January 22nd of 2018, when it crossed bearish, we know that the decline was an 85% massive decline. That is the correction that we all noticed, and afterwards it had another bear cross here in this event where this second red dot is, and that generated on November 5th and created a minus 55% price decline. Then we had a bull cross, sizable rise, and then yet invariably a third bear cross, and that was back in August 19th of 2019, which generated a 53% decline. The fourth took place at around March 2nd of 2020, this year. We all recall this collapse, and this generated a 64% price decline. As you can see here, the actual crossing, the blue line crossing to the downside of the slow moving average red line, it took place on September 21st and has been below it since then. The key question is, if this continues further to the downside, where the blue line curves more to the downside, what level of a price decline can we see? The average of these declines is approximately 60%. So could this bear MACD cross generate a minus 60% price decline? If so, from this price level, a 60% price decline would be at approximately $5,000. Now let's look at Ethereum. For Ethereum, very similar to Bitcoin, I wonder why. The reason the high correlation similarity index exists is because the ownership of Bitcoin and Ethereum is highly homogeneous. The reason why cryptos correlate with stocks is many who own stocks also own these cryptos and vice versa. That is where the correlation of sentiment originates. Back around the same time in January 2018, we had a 94% collapse in price for Ethereum. Then at around July 8th, a 68% decline in price. This is when the bear crosses occurred. The third bear cross took place in March of this year, and that generated a 68.74% decline. Here we have the MACD fast-moving average, the blue line, crossing the slow-moving average, the red line. It's a little behind Bitcoin. Bitcoin has already crossed it to the downside. And when that cross completes, I wonder how far, what kind of a decline in percent might occur on the price. Ethereum has a habit of declining and rising in a greater extension than Bitcoin. Thereby, I believe we're looking at a potential average of 76% decline in price if this blue line continues further down below the red line. This is not, therefore, time to be taking buying actions, but rather profit selling actions or a moderate amount of short position. On Hedgen.com, we trade based on this kind of analysis every day. Join us.